good to go.
Okay,
Hello.
we are live?
Yep, we are live now, so no swearing and keep your clothes on. Thanks, guys. Welcome back. This is our next session where we are going from the question of challenger banks, why do they fail, to open banking. Has it gone far enough? I'm going to introduce Eli, who will introduce his esteemed panelists. We really have got some, I'm not just saying it because it's our conference, we've got some really good thought leaders here, so please join us. I'm going to put out an alert to get people in as well now. So without further ado, thank you very much, guys, and I'm going to hand you over to Eli. Thanks.
Okay, thank you, Johnny. So good afternoon from sunny Tel Aviv. And first of all, I'm really honored and excited to be part of this great event. Fintech Week TLV 2021, a digital edition. I hope the next year it will be the physical edition. And as Johnny said, our theme is very exciting. So open banking. And what the real impact that we have so far. And short intro. My name is Lazarev. I'm from PwC. I'm in charge of financial risk management, and it's a part of my professional that's open banking actually and open data. And I need to confess that my personal passion, it's about open data, and I think that beyond the business opportunity, it's about, I hope so, it's about great social impact. So let's start with our speakers, and please guys, could you introduce yourself?
Maybe I'll go first then. Shalom, everyone. My name is Shaul. I'm head of banking at Banking as a Service platform, Railsbank. We are a global platform connecting our customers to the financial infrastructure and allowing any company to be fintech, which means allowing every company to embed a financial product, any financial product, within their existing user experience to enable greater, better interaction with the customer, control more of the transaction lifecycle, and generally bring finance to the customers where they need it.
Excellent. I can go next. Hi, good afternoon, everyone. My name is Yuliya Pilipenko. I lead global open data strategy at American Express. My team oversees how open banking develops in different parts of the world. We shape strategic direction, identify business opportunities, and work with enterprise teams to bring these opportunities to life. Looking forward to the discussion.
How do you follow that? So my name is Alex Reddish. I'm the Chief Commercial Officer for Tribe Payments. We are a technology company focused on delivering sort of, let's call it, fintech solutions to both fintechs, acquirers, and banks. So we sit across both sides of the original transaction flow, but I've sort of ventured into banking and open banking over the last 12 months as we look to accelerate the variance in transactional flow through the payments ecosystem.
And finally, hi everyone, Jan van Vonno here, head of research at Tink. For those less familiar for Tink, we say we provide reels and brains for open banking. We are an open banking technology provider, licensed as an account information service provider and a payment initiation service provider. But what we add to the market is the enrichment, categorization of those transactions in order to build cutting edge solutions. We connect to over 3,500 banks across Europe, access to about 250 million European current accounts, and working with some of the largest banks in the world, BNP Paribas, ABN AMRO, Santander, BBVA, as well as basically the two-man bands in the garage that have brilliant ideas for the next generation of financial services.
Okay, thank you, guys. So let's start our discussion. As we are speaking here in the Middle East, let's talk Dugri. That means in Arabic and Hebrew, straightforward. So from my experience, I can share with you that when I'm speaking with my clients, and still there is a question: open banking and open data, is it for real? Could you name me some real use case, and this search for use cases in the sense of real impact on financial services? That's the prevalent questions, especially here in Israel in the financial system. So I would start our discussion with this question to you guys. So could you name or could you bring some examples of real use cases of open banking and open data? And I would like to start this discussion with you, Jan.
Thanks, Eli. I think it's the topic of open banking has long been debated, but I think we can't forget that the access to account information has been here for many years. In fact, Tink was founded back in 2012, and some of the pioneers in Europe have been providing open banking technology and capabilities ever since the early 2000s. So I think the technologies here and many of the use cases are quite well known. And I think when you think about the use cases, you think about potential opportunities at every stage of the customer journey. So we would often talk about the use case of multi-banking and financial data aggregation to benefit either consumers in the retail banking way, or businesses to improve their accounting capabilities. But you can also imagine open banking playing value in customer acquisition by using this data to better target and promote specific financial services that are tailored and personalized to the individual based on their spending behaviors and characteristics. You can use open banking to improve onboarding, removing all of those forms and basically manual labor and replacing that by accessing data on behalf of the user from its existing financial service providers. You can improve customer due diligence. So a lot of the regulated KYC, the know your customer processes, can be streamlined and accelerated. And then it has a different part of it, because what I've referred to right now are many of the data applications, but you also have the payment initiation services. And I think this is really unlocking a breadth of new opportunities where merchants, but also financial service providers can look at new affordable capabilities to initiate payments and enrich that with some of the data capabilities of open banking. So hopefully that gives you a little bit of idea. And to give you something concrete, we're working, for instance, with a Swedish bank that is using open banking to challenge the mortgage interest rates of some of its customers. And it's had incredible success, so much that it had to lock down this web application over the summer because they couldn't process the number of mortgage requests as a result. Another example is our work with PayPal. A great example of a large fintech company that is looking to create a really compelling, intuitive user experience, and they're using open banking for the onboarding, and they've increased conversion by more than 20%. So these are some concrete use cases and concrete success figures that open banking brings to market.
Thank you, Jan. Our speakers, could you share with us other insights and examples?
Yeah, I think. Go ahead, Yuliya.
I can dive in and provide my perspective. When it comes to open banking or open data, one thing that we always keep in mind is certain dichotomy between inbound data and outbound data. And from the outbound data perspective, a lot of the companies, a lot of the incumbent providers and the data holders, they have an opportunity to make the data flow much more secure and seamless. So what many of you may know is that a lot of the data flows are currently facilitated via screen scraping, right? And that's the practice that we want to really move away from fairly quickly, just because it has negative security implications. There is no traceability of data. We don't know which data is being accessed and how it's being used downstream. And there's a number of lawsuits that we've also seen, particularly in case of the US, where customers are seeing that their data is not being used in accordance with their consent. So the opportunity for a lot of the established banks is really to create a secure means for customers to share their data with the providers of their choice and extend the reach by being featured within the third-party platforms, the likes of the embedded finance, for example, is a case in point. And then on the inbound side, Jan mentioned all of the great use cases, right? I completely agree. The opportunities exist throughout the entire customer life cycle, from demand generation through acquisition, engagement, servicing, and so forth. And we've seen some fantastic use cases in different countries, right? The Bank of America have launched, for instance, ways to use the third-party data to streamline loan applications. And in fact, a friend of mine was applying for a car loan, tried 3 different providers. 2 of them have asked for very manual application forms that lasted 2 to 3 weeks, and another one used open banking that allowed to seamlessly connect to the bank, share the information, and the loan was provided right off, right? That sets the next bar for customer experience. And then, of course, we've seen a number of different account aggregation apps. Yes, at the moment they're quite clunky, but that's just the beginning. I think we've already seen quite a lot of adoption of this sort of apps, showing that customers are interested in downloading and managing all of their different accounts in one place. And of course, payment initiation is another key use case when it comes to open banking. It's still just taking off. But American Express is driving big innovation when it comes to payments. We've recently launched Pay with Bank transfer product, and we're seeing very positive results. So really the opportunities are many. They will differ from provider to provider, depends on which parts of the value chain you sit in and whether you're a data holder, a data consumer, or both. But it's the world is your oyster. I think the space is very ripe for innovation.
Okay, thank you.
Yeah, can I, if I can just add, sorry, it's interesting. Obviously, there are use cases, and Jan and Yuliya have named only a few, but most of those that have been mentioned are use cases that were developed and used by the incumbent banks, and I think there's a different answer to that question of use case, whether you're looking at what's available for customers or whether open banking has actually created more competition in the market. And I think on the second one, we're not there yet, and it's probably too early because it just takes time to make those connections to cover enough footprint. And there's a reason why Tink has grown as big as they have, and Plaid in the US, because there's a lot of banks in a fragmented market. The other point I would add on competition and the ability to create some additional services is that I think open banking so far has not gone deep enough. It's again because it's early stage, I suppose. But with aggregation, account aggregation, and payment initiation, there is so much that you can do. I'm looking forward to extending open banking across the rest of finance, and indeed across other sectors, where I think innovators will have a lot more fun building new type of services for customers. But right now, it's too limited and too early to tell, in my view.
Yeah, I tend to agree with that. I think, you know, all three of my colleagues here have made valid points in the sense that there is an evident bridge between incumbents and fintechs through the benefits of open banking. And I think that, you know, we've always talked about whether there should be collaborate or co-opetition or whatever cliched word we want to use this week. But I think open banking definitely provides the rails and opportunity for that to happen. I think then when you look at embedded finance, you know, I do think that's where we will start to see some of these additional use cases that Shaul talks about. I think if you look at some of the examples in the US, you've got, you know, Move as a BaaS provider that's now building their sort of open architecture in public. You then see the likes of Squire, you know, which is predominantly focused on barbershops. But what they've effectively done is used a rich subset of data to allow people to manage their barber chair, their rental payments, the distribution of funds. And I think what we're starting to see, to Shaul's points, is the basic principles of technology that then allow the use cases to be adapted. So I think we're very early on. I think the lack of democratization of what was supposed to be a very openly architected piece of regulation probably hinders that slightly. But that's why you look at Tink, you know, that's why I'm sat here as a sort of advocate of open banking, even from a technology company, because the basic principles of success are there. I think we just need to go deeper.
Okay.
That point about every company becoming a fintech company, by the way, is that something I think we couldn't, all three of us, of course, couldn't agree more with. But there are already some practical examples, not just in the US, but also in Europe, where we're seeing this sort of become even more tangible. So to give an example, there's an energy company called Enel, one of the largest utility companies in Europe. They have, last year, November, they announced that they are moving into the payment space. So they had already made huge investments in setting up electric vehicle charging points across Southern Europe. And now, in order to get closer to the customer, in order to build that loyalty with the customer, and helping them manage the payment flows, they decided to become a fintech company, and they're partnering with Tink in order to enable some of that. So we're increasingly seeing businesses from industries that are not traditional finance moving into this space and becoming fintech companies themselves, leveraging the technologies available.
Yeah, not even just for the valuation that's associated with being a fintech, right? But I think I think if you were listening to the Challenger Bank session before, like Darrell made the point of customer experience and personalization. And I think actually the hugely important thing is now, how do you differentiate in such a commoditized market, and finding that hyper personalization, or that ability to deliver a unique experience to myself or to whomever that may be. Like, that's where open banking really wins, because we're all getting lazier, especially having, I mean, I've not left this chair for the last year and a half, really. I think, you know, the ability for me to manage my finances or deliver new experiences with lesser clicks or a better data set is always going to win.
Okay, guys. So let's say just taking our discussion to the next point. As I would like to ask maybe Shaul, because you mentioned about the early stage of open data and the open banking. But what's the role? And as you have background on regulatory advisory in the British Isles and here in Israel, so maybe what the best option or the best steps for regulators to facilitate of this process and to accelerate this process of open banking?
Yeah, it's a good question, and a lot of regulators are approaching it from a different perspective. And just for background, before joining Railsbank, I was a fintech advisor to the UK government. So in the early days, policies.
Or we got a connection problem.
Sorry, I think I'm back online.
Yeah.
Yep.
Yeah. So I was as a fintech advisor to the UK government, and looking at some of those policies in the early days, as well as working with other regulators around the world. I think there's probably two things that are important for regulators to think about. One is, let's move away from thinking about open banking from the consumer end, or looking for consumer adoption of open banking, because the consumers don't care. Consumers want products and services to work, and they have no idea or shouldn't know whether it runs on open banking APIs, a NoSQL database, or a no-code. You know, they don't care. They just need to work. So focus on the infrastructure and not on the adoption. The adoption will come when product builders are able to utilize tools that they weren't available before. And then the other suggestion I would make is to take a look at what Australia are doing, and thinking about open data in the wider context of the economy. Because everywhere we're seeing banks resisting open banking, arguing that it gives tech companies an unfair advantage. I mean, Jamie Dimon from JP Morgan was just talking about that last week in his letter to shareholders. And it's a fair comment to make from the banks. But if regulators were very clear about extending open data infrastructure requirements across the economy, with banking just being the first, I think that would take away the sting from those comments from banks, and probably give them more food for thought about how they can benefit from that. Because open banking is not just for fintech. All the banks can do anything and copy anything that other fintech providers are building.
I think, sorry to jump in, like I think Jamie Dimon's had a much more successful career than I have as so far. But I think the interesting thing is, you know, like banks are trying to find their new role in this fragmented ecosystem. They're actually the ones that have this data. I think for incumbents to look at this as a negative rather than a positive is somewhat naive, because fundamentally their opportunity to play a role in the new age of financial services is predicated on data and trust. They already have one. You know, why would they not play a role in the other? So,
I completely agree. And one thing, and Yuliya mentioned it as well, on the payment initiation. So account-to-account payments are the interesting use case for me in open banking, and they provide banking with access to data they no longer have as much as they thought they do. They all talk about data lakes, but they're not getting new data into those data lakes. And account-to-account payments are probably the Trojan horse that they could use.
I'll just add a couple of points as well from the regulatory perspective. I think there are a couple of points that at least we have observed and generally are advising on when it comes to different government consultations. The first one I think that's important to highlight is clarity of scope. It's super important whether it goes towards which products need to be included in the regulation, or which data points need to be included in the regulation, right? So if you look at the PSD2, for instance, credit card companies are considered to be in scope only in a few markets, but not in the others, right? So for instance, American Express is in scope of PSD2 in UK, France, Sweden and Finland, but other national competence authorities are not considering credit cards as being in scope of PSD2, which is very, very strange and frustrating, as well as for us, as well as for I would imagine a lot of the third-party providers out there as well, right? So when it comes to the clarity of what's included or not is going to be very important, as well as the data points, right? Whether you are a third-party provider or whether you are a bank, need to be compliant with the regulation. Understanding what's in scope, what do you need to actually include in your API design, and your data suite is extremely important. And again, providing the clarity around this is going to be valuable to all the stakeholders in the ecosystem. We've had a number of conversations back and forth with regulatory bodies and with the different stakeholders, TPPs included, as to whether pending transactions should be included or not, and so it goes, right? Another point I think that's important is generally the consistency of the API standards. We've seen again in the UK with the OBIE standard, it has been potentially easier, and maybe Jan can provide better perspective on this, but we've seen that it's easier for the TPPs to connect. There are still variations and sort of play on the theme, but despite the fact it's easier to operate amongst other factors because of the API standardization versus, again, in Europe, different banks adopt potentially slightly different version of the API, and again, it's harder to participate, it's harder to innovate. And lastly, on the competition, and I think Shaul hit nail on the head there when mentioning that it hasn't really gone far enough. It's going to be very important to move from the open banking, sort of the limited spectrum of accounts and providers in scope, to open finance and open data in Australia is indeed a very good example. And I think it should potentially move even beyond this, right? Because there are certain industries like technology that we've seen already benefiting from open banking space and already launching propositions, and yet they're not in scope, and they're the biggest data holders out there, right? So really creating the level playing field is going to be very important, and expanding the scope of the open data broadly is going to be very critical to enabling innovation and pushing it forward.
Okay, so I suppose this point is very clear, and maybe here it's the right thing to just think about payments and payment initiation, because from my perspective, from my experience, that here on PwC we are working with around the world, and most of the innovation and most of the investment efforts in the field of payments, show me the money of open banking, and real achievements here. So I would like to address the next question to Alex and to Yuliya, as the field of payments especially. So what payments in open banking, it's all about making it cheap and simple. So what do you have to say about it? And maybe
I don't know if I'm supposed to say this, but we've just finished our integration with Tink, which to the guys back office is why I have a hoodie sat next to me. But so I think from a tribe perspective, payments is where there is huge operational economic value to be had. So the use case we have is big Israeli fintech that will go, let's say, they'll go live via a SPAC later this year, and you can do the rest. But the idea is basically that there is a huge influx of card acquiring costs that they are seeing on various platforms within the ecosystem. One of the other things that using an infrastructure provider alongside someone like Tink allows is the recipient confirmation. So one of, I think, the flaws that you see in some of the markets within open banking is that the regulation extends to the initiation of the payment, but not necessarily the receipt or the validation. So by playing in a role where technology has sort of paved the way, I think it allows you to see some much more value from the payment as opposed to, just a simple transfer of value. I think it will extend beyond that. Certainly from my perspective, the economic stack up in the UK backs, is still largely more expensive than a faster payment. So there's definite value to be had there. But I still question beyond, or maybe I'm cynical in that sense, I still question beyond the economic value, why as a consumer I would make that change from a faster payment to an open banking transaction, unless there is a data layer on top of it.
Well, I can. So first of all, thanks for the acknowledgement. I mean, we've been extremely excited to working with Tribe, of course, and it's been a long journey in order to get where we are today from a payment initiation perspective. Because I think one thing needs to be really clear for the audience: this is still a very much an underdeveloped market. And what you're now going to be seeing, as especially in the UK, Sweden, and certain markets mature, you're going to now see an influx of new providers coming to market. So I'm extremely excited also to share that last month we started. We're growing, of course, our payment initiation, but doing nearly 100K payments every single day, payment initiations every single day. And we're finding the most traction within use cases where indeed that aggregation of information can be combined cleverly with the payment initiation, but also in markets where you have a high tolerance towards new user experiences and a relatively high appetite to be able to try a new technology for a payment. So high tolerance and relatively low risk. But this is a market that's developing very fast. It's like extremely fast. And I think over the next couple of months, we're really going to see this market take off as the value is really confirmed. And in terms of what the proposition is, I think for the consumer, just to address Alex's point, I think we often forget that all you need in order to pay with payment initiation is a salary account. All you need is an income paid out by an employer. You can pay with payment initiation technology virtually from any type of current account. That means that you don't need to set up an account with another PSP or get a credit card or get a different type of card. All you need is a payment account. And that means that as a merchant, you have you can offer a payment service that anyone can use. But on the other hand, as a consumer, you also know that regardless of where you're shopping, you can use your payment account to purchase your goods. So that is a benefit from a consumer perspective.
Yeah, and I would add to it that I would say that moving from established and complex system to something like open banking will certainly not be a painless exercise for a lot of the established firms. And it is an acknowledged fact that payments will need to find new ways to add value for the end users, whether be it more seamless, cheaper, and so forth. And I've already mentioned that American Express is driving big innovation when it comes to payment initiation. We've launched Pay with Bank Transfer in the UK a couple of years back, and it's enabled us to provide better choice to customers and businesses through new ways to pay. We've certainly seen acceleration and customer adoption of open banking services, including payment initiation, and generally account-to-account payment initiation gives us another level of flexibility, providing an option to meet merchant needs for faster settlement, effective reconciliation, and of course, seamless customer experience. I think as a means of payments, it's still a very, very early space, but particularly in light of the latest developments and the pandemic, right? We've seen so many new businesses entering e-commerce, and that could be a very attractive way for them to start accepting payments from customers. So we're super excited about innovating in the space as the industry becomes more open, as it matures, so we can continue to deliver unique value to our customers and as well as merchants.
Yeah, I think it's interesting the way the card networks have responded to developments in open finance, and obviously MasterCard acquiring Finicity, Visa's attempt to acquire Plaid, and Amex have not made a move yet, although Amex is its own issuer, so it works a slightly different way. But in order to provide long-term economic benefit, I think what we really going to have to see is not only not just an open banking on the data layer, but also open banking on the infrastructure layer, to remove the hold of a small number of players, whether that's on the card or on bank accounts, hold on the market. So the UK was the first one to allow non-banks direct access to the payment systems with a settlement account in the bank, in central bank. Bank of Lithuania is offering something similar. The Singapore Monetary Authority have announced that they're considering opening up their systems to non-banks, and I think TransferWise are the first one in Australia to have a restricted license in order to get direct access. So that's where I think a lot of the value will be driven from, and that's where real competition at the infrastructure level drives an influx of innovation in the future.
Okay, guys. So we have, I think we have about 5 minutes left, and I think it's a good thing to allow our audience and participants and delegates around the world to ask questions, and you are very welcome to have questions. No. Maybe I would like to ask a question. The last one, and just if I'm willing to the audience, if you have questions, so at the time, just and as you are all our audio speakers are inside the industry, and I suppose many people who are looking for investing or just to understand how the open bank process next 2 or 3 years, as you all mentioned, it's the early stage, and on the other hand, it's very developing, it's accelerating development. So, could you share with us your perspective about open banking in 2 or 3 years?
I'm happy. Yeah. I think if we look at the regulation first, I think we will see a next iteration of the Payment Service Directive in 3 to 5 years, I would say. Maybe not quite your bracket, but I think that will talk to some of the excluded from the regulation, how we can access, like a financial inclusion principle for those within the payment space. I think from a open banking perspective, I think that term will fall away, and it will be much more around open data, as Yuliya says, or open life, depending on which iteration of that process we get to. Fundamentally, the data aggregation or the use cases to deliver quicker insurance or mortgage valuations, things like that, that will just become a normality. And I think the sign of success for open banking as it is today is that the payment becomes fundamentally invisible, and that it's an experience that one goes through and happens to make a payment transaction or acquire a piece of information at the end. So my hope is that that sort of nirvana is in play in the next 2 to 3, but we'll see.
Yeah, I would say my prediction is that there will be developments across the 4 themes, right? Scale, right? Global scale. I think many of us have seen those heat maps, right? That different companies have presented, and you'd see more and more countries featuring, and the maturity or regulatory involvement would grow. So I would imagine that more countries in 2 to 3 years' time will join the space, be more active when it comes to industry consortiums developing standards, or more active regulatory-wise. We've already seen developments in Canada, Mexico, and many other markets, and sort of stepping into the next phase of maturity. So I think there will be more of that. The next one is, I think, data scope. Again, moving and developing from open banking to open finance, and sort of pushing the envelope to the next level. Customer adoption is going to be the next one that I would envision taking off more and more. UK, we've seen OBAE publishing figures, 1 million customers, 2 million customers. Now I believe we're at over 3. And we've seen this trend propelling globally, whether it's facilitated by APIs or screen scraping. And lastly is more and more competition, more innovation in the space, and very, very exciting to see what's going to be coming out in the next few years.
Yeah, I can build on top of that because Yuliya, the question in terms of where I see or we see open banking in 2 or 3 years is actually the question, where do I see Tink in 2 or 3 years as a provider of open banking technology? And I have to reflect on the points that Yuliya made and Alex made, because I couldn't agree more. Yes, this is a global phenomenon, so that means also that connectivity and those provision of that connectivity to different financial institutions for whether it's payments data, whether it's loan information, whether it's pension information. That type of information is bound to be democratized and become accessible to the customers that want to trust a third party with that information. And the democratization and the access and provision of that type of information is one of the areas where Tink is going to be expanding in. But when we look at specific markets, I think, especially if you look at the current situation, because we haven't mentioned the pandemic yet, I'm actually about to publish at the end of May a report on the economic effects of the pandemic. And I think one thing that has been partly muted in the media so far is basically the impact that it's had on households, on income, and there are many risk attributes that are currently invisible to many of the supervisors. But if the banks look deeper into their data, they can actually see many of those risk attributes early on and anticipate the increase of risk, anticipate potential defaults and non-performing loans. So actually, over the next 2 or 3 years, I expect the credit risk and those types of insights to develop quite rapidly. And I'm expecting the payment space to develop quite rapidly as this becomes a strong alternative to establish payment options. So that's where I think a lot of innovation is going to happen. And of course, seeing the rest of the world adopt open banking too.
So let me add on that, and maybe slightly controversially, where I see the markets going. So firstly, like I said, I think open banking favors the big, and I expect the banks to play a much bigger role and take advantage of open banking in the next 2 to 3 years, because it's easier for them, and it would be cost effective and economical for them to do so. On the flip side, we'll see finance moving to non-finance and becoming, like Alex said, just invisible and part of other tech companies and brands' provision of services to their customers. So, potentially open banking is the end of fintech as we know it, and it'll be polarized between the banks doing banks thing better and non-fintechs providing finance.
Great. So, but to summarize, I think that the common hope for open banking and open finance developing as much as faster, and to allow customers to get a much better experience and for investing in financial creating values. So, dear audience, we are still for questions for you. Can our good panel.
Ali, your connection's not you're pressing a little bit.
So we are running out of the time, and the last just to say thank you very much. It was an honor and it was a pleasure to meet you and to be with you on this panel. And thank you again.
Thanks.
Thank you, everyone. Thank you. Yeah, thank you, guys. That was a fantastic panel. If the audience could please show their appreciation, we have a little emoji button at the bottom. If you can just give them your appreciation, that was a fantastic panel. Ellie, Alex, Jan, Yuliya, and Shaul, thank you so much. That was very insightful, and we appreciate it. That ends this session. We're going to go into a presentation now.